Hello and welcome to Inside ETFs. We're live in Hollywood, Florida. As a reminder, today's interview is for informational purposes only. The NYC does not recommend investments or investment strategies. I'm joined by Tim Murphy. He is the Senior Portfolio Manager at Envestnet. Tim, thanks for joining.
Yeah, thanks Doug, thanks for having me.
So Envestnet, quite the name. I know you guys are spending a lot of time here at the conference. You're talking to advisors, you talk to advisors all the time. What are some of the conversations all about?
Yeah, sure. So Inside ETFs has been great. We're hearing a lot of the excitement around ETFs, specifically active ETFs. I think we're hearing a lot more about this year and in the past year. And that kind of translates to what we're hearing on our platform and seeing on our platform in terms of asset flows into ETFs and ETF portfolios, and then just a general interest in active ETFs too. And then this week we're hearing a lot of the debate around active versus passive as well, and especially how that translates into ETFs.
Yeah, so big news, Envestnet, excuse me, is now, you have your own ETFs. Tell us all about it.
That's right, yeah, so we launched our active passive ETFs on the New York Stock Exchange in the first week of May. Everything's been going great with those portfolios, so we launched 4 ETFs, US equity, international equity, core bond, and municipal bond. And there's definitely a unique innovative structure to these where we're using a multi-manager approach, multiple sleeves, sub-accounts for each one of the ETFs, and we tilt towards active or passive based on our active-passive research study that's really fundamental to our process, where we've looked at over 12,000 mutual funds performance over a 40-year period and determining whether the asset class is a better fit for active or passive and how we can translate that into the ETFs.
Yeah, talk to us a little bit about that because it's really unique. How do the ETFs themselves actually work?
So we have a multi sub-account sleeve structure for it where we're using high conviction institutional managers for some of the sleeves, and then some of it's managed internally by our quantitative team. So we have active and passive combined with inside of the portfolios. We use factor active as well as traditional active, and we can tilt towards overweight active and asset classes that are more likely to have active manager success, or tilt towards passive where passive is a better asset class, like large cap where passive has traditionally done better, or small cap or international emerging markets where active has traditionally been delivered better returns than passive.
And all wrapped in a single ETF. I know it's going to be a hard question, but do you have kind of like a favorite of the ETF list so far?
I think one of the interesting ones is definitely the international, so that's active passive international, it's APIE, and that one has 5 sub-account sleeves for it too. So we use 2 traditional active managers that are sub-advising for the ETF. Those are from our high conviction research team selection, and then we have 3 sleeves that we're managing, a market series approach and 2 factor active approaches for international and emerging markets. So we can tilt this ETF a little bit more active, where international and emerging markets have been shown to deliver better active returns.
And again, 30 years into the industry, we're still innovating. Envestnet coming onto the scene with ETFs. Tim, we're excited to track the progress. If you're watching this live and you're looking for more information on the Envestnet lineup, easy for me to say, go to etfcentral.com. You can type in any of the symbols we talked about here today, or just type in Envestnet in the ticker bar, and you'll see their entire lineup. You can learn a lot more information. All brought to you by none other than the New York Stock Exchange, the home of ETFs.